It's Matt Simpson here from Forex.com, and I'll be looking at the Aussie dollar against some of the FX majors to weigh up their potential for deeper pullbacks. Now, I've been warning of a pullback on the Aussie dollar for several weeks now. Future positioning was arguably stretched, and we've already seen a pretty decent run over the past year. More recently, gains have been harder to come by, and its performance has been mixed against several FX majors. But now we're seeing momentum turn lower against those majors, and that can generally coincide with a more meaningful pullback. And with domestic data softening, and expectations for an RBA hike significantly lower, it's weighing on the Aussie for now. As for the data, household spending fell at its fastest pace since October 2023, with transport, clothing and food being the biggest cutbacks on spending. Inflation remains hot, but it could have been worse. The monthly report showed headline CPI rose at its slowest annual rate of 4.2%, with housing, food and transport rising at a softer pace. Trimming inflation at 3.4% is of course too hot, as it remains above the RBA's 2 to 3% target band, so that will force the RBA to retain a hawkish bias at their next meeting. But softness in the labour market could allow them to hold rates in June. Unemployment rose to a 4.5-year high of 4.5%. Jobs fell around 19,000, mainly fueled by a drop of full-time employment. And as the RBA have already hiked at 3 consecutive meetings, they may decide to take a break, but deliver a hawkish hold in a few weeks. And it's the repricing of RBA expectations alongside a stronger US dollar which is weighing on the Aussie for now. Though the tide may have turned against several currencies, particularly the Kiwi dollar, pointing towards a significant top. Now, starting on Aussie Kiwi long-term chart, let's admire the view here because it's been a really strong rally from the April 2025 low, but it has stalled around 122. But if we zoom in, we can see that this weekly candle is on track for a bearish outside week, and in recent weeks bullish momentum has been waning. There's also been a bearish divergence forming on the RSI. As for the daily chart, this bearish wedge or rising wedge pattern didn't quite work out, but this was the candle following yesterday's RB and Z meeting where the central bank delivered a more hawkish surprise than expected, although they did hold rates, and coupled with the fact that the Aussie inflation report didn't make it a slam dunk for a hike, that had resulted in the most bearish day for Aussie Kiwi in 9 years. And given the fact that momentum was already slowing into this high and we've seen this momentum shift, I do think we've seen quite a significant top there for the time being. That doesn't mean we're going to see a massive pullback, but I'll be quite surprised if we take this high out quite soon. So for now, I think bears will be looking to fade into a rally within this candle. Downside targets including the base of the wedge around 119.30, with the break beneath there opening up and move to 118. Now the odds is a really interesting one because we've got this rising wedge pattern at the end of this cycle before bearish momentum took it outside and reached my downside target around 71 cents. We discussed that in a prior video. It's not too surprising to see that hold because you've got the monthly pivot point, previous swing low and the 71 cents handle all in that area. And whilst prices tried to move higher, it made really hard work of it, which to me is quite a good indication that this is a correction against this move. And you can now see we've got momentum turning lower once again. So the bias is pretty simple from here. If we get a break beneath these lows, the most obvious area of support here is 70 cents. Perhaps if we really do get a risk-off signal, it could continue lower, in which case we've got the monthly S1 around 69.65 and a high volume node just above 69 cents. But whichever way I look at it, this to me is a pretty decent topping signal. It's just a case of how severe the pullback is. For now, I think support will probably be found around 70 cents before swing lows are found and we break to new highs. Euro-Oz is an interesting one because it's clearly in this established downtrend. However, support was found around that March low. Momentum did then burst higher. But what really caught my eye earlier this week is this falling wedge pattern. Momentum's already turned higher. Now, I did do an article online, I think it's around this day, looking for an upburst higher, which we've now seen. The question is, can bulls get another opportunity to enter long with a view of taking it potentially up to the monthly pivot point? Possibly. Ultimately, as long as prices remain above this swing low, I think dips within this candle range could look quite appealing for bullish setups, with the near-term target being these cycle highs, and above here we're looking at the monthly pivot point. It's a pretty similar setup on the pound Aussie, but there's some slight differences. Again, we do have an established downtrend, so I'm not looking for a significantly higher move from here, but I do like that we had this false break of the March low and then quite a strong reversal above it. Price is now consolidating in a potential bull flag pattern above the monthly S1 and the March low. So again, even if we do get a bit of a pullback beneath these lows, I'd still be interested in bullish setups once prices hold above this very tight support zone, with the view going back up to either the May 2024 low or the monthly pivot point near the 1.9 handle. So in a nutshell, I think the Aussie dollar is heading towards 70 cents before its next swing low, an eventual break to new highs. A significant top may have been seen on Aussie Kiwi, and Pound Aussie and Euro Aussie look quite compelling for bullish setups over the near term. As always, I hope that's useful and wish you best of luck with your trading.